Building a fintech? Your banking partner should grow with you. Cross River doesn't just process transactions, they expand their capabilities as your business evolves. From standard financial products and services to sophisticated capital market solutions, they're built to scale alongside ambitious fintech companies. Learn more at crossriver.com. And welcome to the Tearsheet Podcast, where we explore financial services together with an eye on technology, innovation, emerging markets, and changing expectations. I'm Tearsheet Editor-in-Chief, Zach Miller. And in an era where bank-fintech partnerships often feel transactional, some collaborations transcend the typical vendor-client relationship to become truly transformative. The question isn't just whether banks and fintechs can work together, it's whether they can evolve together while navigating an increasingly complex regulatory landscape. And today, we're exploring one of the industry's most enduring partnerships with Adam Goller, EVP and Head of Fintech Banking at Cross River. Adam joined Cross River at its inception in 2008 and previously served as Chief Credit Officer overseeing the bank's marketplace lending program launch. Also joining is Bobby Ritterbeck, President of Best Egg. Bobby calls himself an accidental entrepreneur, but his success in building Best Egg is no accident. As one of the company's co-founders, he's leveraged his banking and credit risk background to create a platform focused on customer needs. And the Cross River Best Egg partnership has evolved from basic loan origination to sophisticated capital market solutions over the past decade. And today, we'll explore what makes this collaboration work and what it reveals about the future of bank-fintech relationships. Welcome to the show, Adam and Bobby.
Thanks, Zach. Appreciate the time.
Yeah, thanks for having us.
Excited to talk to you guys. So let's talk about the nature of the relationship. Maybe you guys can just talk about the who, what, when, where, just so our audience can get a feel for what the nature of the relationship is.
Yeah, I can take that one. It's funny. When we first got into the business, we met several new companies, many startups, and some of them were like three guys in a garage. Some of them were more sophisticated than that. This one actually started with a random phone call on a Sunday morning. The original founder, Jeffrey Miley, reached out to our CEO on LinkedIn, a very short note saying, have an idea to start a new company. I came from so-and-so company. Here's my background. Let me know when you have time to chat. And our CEO sent back a note and said, when do you want? I'm available now. This was Sunday morning. And they talked for about 20 minutes. And the next day, or that day, actually, I got a note from our CEO, Jill, and he said, you got to talk to this guy. I think he has a really good idea. And we were pretty new in this space. This is back in 2013. We spoke on Monday morning and we went to Delaware to meet them not that long after that. And next thing you know, we were partnering on what became a really, really great partnership.
Yeah, I mean, the thing I would say is Adam says that, they were relatively new, which is true, but, we were an idea. And early on, Cross River, frankly, made a bet on us. And, I think it's worked out pretty well on both sides. But yeah, that took Jill and Adam to take that leap of faith with us. It was great.
So let's talk a little bit more about what that idea is.
Yeah, so the concept when we first started was, if you go back to the timing, the personal loan had still broadly disappeared. There were some peer-to-peer lenders that had popped up and started to be the first folks back into the personal loan space. But because of the credit crisis and capital demands and the way banks were operating at the time, it just was this product that's like one of the oldest financial products that has ever existed had largely disappeared, at least in the US. And so we, as we stepped into this, we thought, hey, we can take the banking skills that we put together. We can take advantage of this gap. We can build a company that is a low politics, great place to work, and leverage partnerships like we ended up forming with Adam and Co. to create something that we think could compete with the banks, despite some of the inherent size disadvantages that we had early on.
The market back then was essentially lend, income, and prosper. There weren't that many companies operating in the space, so they were pretty early on. But I think that Bobby's being humble, but the reality is that they had a lot to offer, even though they were a startup. They came with experienced capital, right? Their investors were folks who had been in the space for a long time, and they came with a really experienced team. I mean, the team that started Best Egg had worked together previously at another company, which is really valuable. They weren't three guys who showed up together one day who met accidentally. These are people who had worked together over a number of years and themselves had success previously. And that really, really speaks volumes for what was to be a success at Best Egg. And so for me, when we think about how we evaluate these partnerships, they brought a lot to the table from experienced capital, dedicated capital, experience, knowledge of the industry. And also, I think the team that they brought had that success together, which again boded well for the company.
I'd love to hear more about the human impact that this partnership has had and how many lives it's touched.
Well, I can talk to you about some of the stats for Best Egg. We've done almost 35 billion in loans life to date since we launched in 2014, and that's touched about 2.5 million customers, just about. We are this year we'll probably do somewhere in the ballpark of 8 billion in loans, and that'll be bringing on another 500,000 customers.
If we could just double click on that, Bobby, do you have like typical use cases that your customers come to you for?
Yeah,
Maybe some stories there.
Yeah, our target customer is consumers with limited savings. So we define that by folks who have less than 2 months of their expenditures handy, so they can have 401ks and other things. A lot of times, people think of that as a group that's has maybe bad credit or has lower incomes, and that's why they're in that situation. But the reality is, our average user has over 700 FICO score. They have 130,000 in individual income on average. So this is just a group who leverages credit in their life, and they use it to get the progress that they want to make. And so they're comfortable with it. And what we try to help them do is get off the treadmill of the minimum payment on cards and leverage our personal loan solutions to help them get on a path to reducing that debt and taking advantage of all the other positives they've built in their financial profile.
One of the other things that became apparent when we first met Best Egg, I heard this term from their team the first time we met, and I'd never heard it before. It's called Henry. To Bobby's point, high earner, not rich yet, right? These are people who have income, right? They're not necessarily like deep subprime, low credit borrowers, but to Bobby's point, they don't have the savings, right, to pay down debt. And so I think they had a keen focus on helping people, which I think really resonated for us. So you see that in the marketing they do. Like, a lot of their outbound PR is around how they help customers. They started like a credit health platform a while back, where they offered, credit reports and other services to help folks manage their financial lives. And I think their slogan, Bobby, I don't remember what it is, but it has something to do with like something better living or something. I can't recall what it
is. It's be money confident.
Be money confident. There you go.
Be money confident is
I should know that already. Yeah. So I think the whole point is like their intent on serving the industry is all about helping the end user get out of debt and improving their financial life. And so for us, that's our mission is the same. Our mission is to empower people to have better lives, and that's working between the two of us.
I mean, Bobby, the numbers that you shared about Best Egg are very impressive, and I'm kind of curious. We've heard a little bit of the backstory, the genesis story, but I'm kind of curious when both of you said, "Well, this partnership, between Best Egg and Cross River could be something big, not just transactional, but something transformative." At what point in the story, and what point during the partnership did that become clear to you guys?
Well, I would like to say I knew from the beginning. The truth is, I don't know if there was...
Bobby's modesty shines through in every response that he has. Yeah.
The truth is, we're in year 11 or 12 now, and it's always like, what's next? What's the next thing? Are we going to get there? So, I don't know if you're ever totally there, but what I will say is on the partnership, like I said, from the very beginning, it was clear that there was a bet made on us when we didn't have anything established yet. And over time, the partnership evolved in a lot of ways. The thing I would say is, as we think about like how we try to serve customers and how we got to, our slogan and the way that we're doing it, a lot of it's by listening to customers. And the way we think about listening to the end consumer and bring solutions to them, Cross River does a really good job of that with their clients. I mean, over the course of time, whatever things that were like our core needs that the bank partnership could help serve for us, they've brought to bear. And what I'll say is like, if there's anything that was close to like an aha moment for me, it was when we had the big scare around COVID in 2020. So when there's fear, funding dries up very, very quickly.
Mm-hmm.
And I can't say for sure that there was a day where Cross River was the only one that was continuing to buy loans. But if that wasn't true, it was very, very close. And it just tells you like whatever success we've had over time, the partnership with Cross River has been the backbone of that. And you really see it's kind of easy to be partners when everything's going well. It's when things get a little scary and tense and you got to figure out like how deep the relationship is. The real partners show up, and for sure that is like a moment for me in our partnership with Cross River that like I won't forget for sure.
It's funny because Bobby mentioned COVID, and that's one of two examples I would think of. But it's like a marriage where like you don't know how good your marriage is until something goes wrong. And we all know that the balance between the fintech universe and the bank universe is that regulatory compliance aspect, where like it's the least fun we all have is like dealing with the regulatory compliance aspect of it, like audits, examinations. And so when things like come up and you have to make a request or you have to ask them to change something that they may have been doing on either side, right? That's where I think you really see strength in partnership. And I think what I can say is that their team, we can have a whole day of meetings and talking about like complicated things, technical things, and we'll go out for dinner afterwards and everyone will be joking around and having a great time. Like it really is a partnership where we both understand that we have a job to do and we're trying to enable this product to go at scale to market. But we all also understand that we all have jobs to do, and like it requires like true not negotiation, but a true collaboration. And what I always find about BestEgg, certainly a lot more than many others in the industry, is that they understand our role and they don't question our role. And we come to them with something we have to work on or improve. It's absolutely collaborative. There's no friction there at all. It's an open conversation.
So I have to imagine, you mentioned COVID as being a pivotal moment, but in a decade-long partnership, I have to assume there are other pivotal moments that Cross River provided, services, solutions, feedback that helped you scale, Bobby? Can you point to other ones?
Yeah, I mean, look, there's definitely been guidance and feedback as the beauty of what Cross River can bring to bear that it's very hard for us to bring is this really broad view of what's happening in the industry, in the market, like even like regulatory landscape. When you're a reasonably small and lean company, which we focus on staying, it's helpful to like you have to access resources from everywhere, and Cross River has brought that kind of stuff to bear pretty consistently for us. Beyond though just the bank partnership, I mean, Adam can probably talk to some of the other ways that we've interacted from a funding and other collaborations we've done together.
Yeah, so I'll say a few things on that. I mean, one, I think Bobby's right. I think the fact that we have a breadth of industry that we have, I think is important. I know there've been meetings we had in person where we came away with open questions they had and were able to provide either third parties or vendors that we knew of from our other partnerships, they were able to leverage. And so I think that having that breadth of experience and breadth of knowledge across the industry helps. It also helps that I think that we also have a tech-minded mindset where like we are truly a tech company, not just a bank. But to Bobby's point, I think most recently, this Beast securitization, which is the greatest name ever on the ABS shelf.
Beast?
It's really, yeah, Beast, exactly. In fact, the team was like, I'm not sure how exactly we got it. It should have been taken already. But I think the point on it overall, without going into too much depth, is that it was the two teams sitting together and saying, to Bobby's point, funding is one of the biggest challenges that we have in this space, right? It's not just the fact we need funding. right? We need funding to be reliable. And I think the ability to do so in a repeatable, lower cost way is what Beast provides. And so this structure they put together where they can create loans and then immediately be able to roll them into this Beast shelf, I think is truly unique for the industry. And frankly, other partners of ours have asked us to create the same structure to repeat it for them. And so I think it's just the result of two teams understanding what had to be done and being creative, and also Cross River having the tools to do it, which is unique to us as well. And so I think that was a key moment in the partnership where we all realized the problem. Where basically, there was Madden, there was COVID, and there was like the rate shock of 2022, 2023. And so we all realized, hey, this is the third disruption in liquidity since we started working together. Let's figure out a way to solve for that. And we sat together in a room and we figured it out. And I think that shelf is something that will be created for others and will probably be a wider industry solve for years to come.
Yeah, I was saying even in 10 years, I mean, it's been 3 lifetimes here in those 10 years, 3 administrations, just craziness. We speak to a lot of banking as a service providers here on this podcast, and a lot of them at a certain point begin to sound the same. I'm curious to hear both your perspectives, what distinguished Cross River during your initial selection process, Bobby, and what has kept the partnership strong for over a decade?
Yeah, I mean, I think we've in the probably love fest that's been the start of this podcast, we've covered a bunch of it, but to me, it was I think you might have mentioned in the opening, like sometimes these relationships can be transactional, and I do think it felt personal early on, and it felt like, hey, let's go do this together versus, sometimes these things could be like a more of a vendor relationship where it's like, hey, we need you to serve this one function for us. And that's why, like, at times, you get into disagreements because, your goals and their goals are just totally different. And a lot of times it's just about, the financials and the role that you serve as one of their customers. For this, when I think about where we started, the reason Cross Rivers is in this business is because they want to increase, I think, but I don't want to put words in your mouth, Adam, but it's about like increasing the reach of fintech and financial solutions and aligning with the goals that we have. By the way, our goal on day one wasn't exactly the goal that we had today. We were very focused early on helping people get out of debt. We've learned a ton more about our customers in the decade since. And like I said earlier, like some people are comfortable with being in debt. It's just about optimizing, and what being money confident means for our folks is understanding the ins and outs of their cash flows. It's knowing knowing there'll be money there if they need it. And it's around like feeling good about the decisions they're making, because a lot of times this stuff can be intimidating. And so as we've started to come up with different solutions, the innovation that Cross River brings to allow us to be flexible and to do the things that we want to do has been really huge. And it's because they're aligned on the mission that we're aligned with.
Yeah, maybe I'll touch on the Cross River side as well as the Best Egg side. On the Cross River side, to Bobby's point, there are things that we require or we do that are different than others. And I think what I always think about is that some of our partners resent that, and some of our partners appreciate that. On the compliance side, we tend to be very strict. We want to make sure we're obviously compliant. And for some folks, that's challenging, it's difficult. But I think for folks at Best, that they understand our role and they understand the pressure we have to maintain good stead with those regulators. In addition, we're the only bank partner that does everything through its own core technology. We built our own core years ago and slowly started with lending, expanded to payments, cards, and now deposits. And so when you work with Cross River, it's not just sending us a file drop for us to look at a few loans in Excel on the lending side and then to review it and fund loans. It requires API integration, which is very unique for us. And so I think that, to the point I made before, some think about that as extra work, extra money spent. But when you take a long-term view on the industry, on the partnership, you understand that if you're trying to grow at an able scale that will last generationally, you have to invest in the partnership. And I think that their willingness to do that is really important. And that, I think, is the core difference. And I think kind of is the overarching concept that I would point to. It's that there are folks in this industry in fintech who look to start a company, and right away they tell their investors, "This is a 3-year strategy, or 5-year strategy. We're out." Right? It's 3 years to sale, 5 years to IPO, whatever the goals are. And I think that with Best Egg, what's unique is that they truly have a long-term view of the partnership. And not only the partnership, but the industry. They're looking to build an industry, and they're not taking shortcuts. They're very credit focused. One other really important thing that's really, really crucial to us, they like steady credit. They're conservative people. They don't look to jump. They weren't the first ones post-COVID out of the gate, loosening standards, just trying to increase volume and take market share. They took a very conservative approach, perhaps at times to their investors' chagrin, but they wanted to grow, very systematically and not be too aggressive. So credit's very important to them. It's that long-term approach that I think is the overarching reason why I think the partnership works.
You just heard Adam and Bobby discuss how their partnership evolved from simple loan origination to complex capital markets solutions. That's the Cross River difference. They don't just offer banking services. They innovate alongside their fintech partners as needs grow. Whether you're launching your first product or expanding into new markets, Cross River adapts their platform and capabilities to match your ambitions. They've been doing this since 2008, helping fintechs navigate regulatory complexity while building the infrastructure they need to scale. From marketplace lending to sophisticated financial products, they're more than your bank. They're your growth partner. Ready to evolve together? Visit tearsheet.co/crossriver to learn how Cross River can support your fintech's next chapter. There's a common belief that compliance requirements can slow down innovation. And as a bank that has quite an extensive network of fintech relationships, Adam, what do you think of the trade-off between compliance and innovation? And how does your expertise in the space and how has it helped Best Egg expand its own product offerings?
It's funny. There's a line that we used since the day we opened the bank. Actually, it wasn't even me. It was our CEO, Jill. And he said, as a bank, you don't look to eliminate risk. You look to mitigate risk. Because we all know that regulations, are not black and white. There's so much subjectivity. You could talk about fair lending, UDAP, other like more subjective qualitative laws or rules, CRA, but there's so much subjectivity or interpretation made to how they're applied. And so I think that you cannot eliminate risk. So for us, we look to have the strongest compliance program that mitigates any risk, but is facilitating growth. And so for us, it's that balance, exactly striking that balance. How can we figure out a way to work within the regulatory framework we're given, within the laws we're given, comply with those laws, but also build technology and a compliance program that still facilitates growth. And that balance is the key to how we've grown so far in every area, frankly. And I think that I said before, but with Best Egg, their acknowledgement of that pressure that we have, that balance that we have to maintain, I think is what's created a healthy partnership, because they understand we come to them with something, whether it be a change for the whole industry, how we think about fair lending or creating a new technology or an API to scale that. I think they understand that it's not us being a pain in the neck. It's us telling them that there's a better way to do something that will help you for the long term. And so I think that in that framework, I think it's absolutely a competitive advantage for us. And I think that the right partners see it that way and will, frankly, work with us on enabling that.
I mean, I think the thing I would just add on this front is, we do like as part of our processes, all employees take all these compliance trainings every year and make sure we know what we're doing. At this point, I can do them all in my sleep, which means the laws have been, a lot of the regs and laws and directions have been around for a long time. But I don't envy, regulators and government officials that have to think about things that just didn't exist when all this was built. I mean, we're sitting here today in a world where, people are making their bank data accessible and, machine learning and AI are playing roles in, working with customers or making decisions around customers. So you have to have people that are thinking through what the implications of those are and what that means the way the regulations work today. And I will just say that, if just the fintechs were doing that, versus the banks that they're working with, like that would make it very, very difficult. And Cross River is very forward thinking on a number of these fronts, and is not shy about working directly with the regulators around what that could mean to make sure they're staying they're coloring within the lines, and but also being thoughtful and innovative about the future.
Cross River's use of balance sheet through loan retention, seasoning facility, and risk retention loans represents significant capital commitment. I'm curious about which attributes should fintechs look for in a banking partner when seeking growth capital versus operational support?
I guess that one's for me since we're the ones picking. Look, we talked about a bunch of these things already. Mission and goal alignment's number one. Like if it feels like a transaction, you're probably going to be unhappy pretty quickly. We talked a lot about you definitely need scalability and flexibility. So it's fine. Your partner now has to be able to be your partner in the long term. So they need to be able to scale with you if you're able to pull it off, and be flexible as like your business evolves. We talked about the early days. Our original plan, I mean, we're pretty close to that original plan, but the way we got here has definitely been quite a bit different, and having flexible partners pretty helpful. Thinking about innovation and what we just talked about, how to think about the world changing around us and what that can mean. And the obvious one is a capital commitment is really valuable. Getting some sort of reliable capital and that being part of the equation. I think all of those things are super valuable in a partner.
I'll add one more thing, which we didn't touch on at all today. I think that we understand technology is important. We understand compliance is important. But when you think about, you're a new startup or potentially in an industry, perhaps only in lending as an example, and you don't think about what you're going to be in 10 years or 15 years. And we have so many use cases where a partner came to us for product A, let's call it lending, and that ultimately expanded to a deposit product, a payment service, a card product. And so I think when you look at the banks that serve fintechs, you can't just think about a monoline business. If you really have aspirations to be more than that, you have to think about, can the bank that I'm working with today support me for the product I'm offering today? But can they expand that product to go beyond that, for the long term? And so when you have a company like Cross River who has technology that enables every product, and you can scale from lending to payments to cards to deposit accounts, that's really important. I know for folks like Best Egg, thinking about serving their customer long term requires new products all the time. And so thinking about the long term versus the short term, and again, a good example we mentioned before, I think just differentiates the bank fintech partnership even more.
Bobby, this is going to go back to you too. And, I assume, you had to judge a build versus buy decision at different parts of your maturity and different parts of your growth curve. I'm kind of curious how you look at the relationship with Cross River and how that impacts those decisions about what you can do internally and what you can't and you want to partner on.
I mean, look, I think when we balance things, when we make the build versus buy decisions, I would say we probably gravitate toward not reinventing the wheel if whenever possible. If you're going to build something, from my standpoint, like you better be bringing something new to the market. And so, we don't have any shyness about building versus buying and leveraging what's already been put out there. So, when we think about what Cross River brings to us, obviously, one of the big build versus buy decisions, I guess, is like, what about becoming a bank? It's not something we've never thought about for sure. But, I think ultimately, this works really well for us as a company partnering with Cross River, and it hasn't been limiting in many ways. So just one of those decisions that you keep thinking through. But as long as what we have works really, really well, I guess if it's not broke, don't, or if it's not broke, don't try to fix it or something like that. I forget what that phrase
That's exactly the phrase. Yeah, I was thinking the same thing. No, I think I have a very strong view on this, and I think that I can sort of summarize my opinion on this matter like pretty succinctly. The build versus buy decision, I think, for a fintech, I always say this, should be that whatever you have to build to support your core competency, you should build. As an example, if it faces the customer and your best egg, and it's to help improve their experience, the application flow, the acquisition of the customer, the servicing of the customer, absolutely think about building it versus, let's say, buying it or partnering on it. But when it comes to the things that maybe aren't your core competency, right, where like it just makes perfect sense to work with a bank who has a competency in regulatory compliance, has the ability to do things you can do that aren't part of your core mission, right? So the question is, why would you go ahead and try to build something that's not part of your core competency? And we feel the same way. We have we don't build anything that faces a customer. Everything we do is B2B because our expertise is not in serving customers directly. And so I always believed that people should build what supports their core competency and partner on things that don't. And to me, that kind of dovetails to the next question you wanted to ask about, like, and Bobby mentioned this already, should all fintechs become banks? And it's the same answer, at least in my view. If it's not your core competency or your mission, then don't do it. And so becoming a bank means you don't have to comply or contend with things that are outside your core mission of serving your customer. And so to me, that's a distraction from the core mission. And so when I think about the philosophy of what to do or what to build or what to becoming a bank sounds like a great idea. But I don't think it actually helps fulfill the mission that Best Egg and others are trying to fulfill.
I want to take our last question and zoom out a little bit, maybe look towards the future. If we sit down 3 years from now to kind of catch up on this partnership, I'd be curious how each of you would forecast how bank fintech relationships might have changed in the 3 years. What will stay and what will be jettisoned? How will things evolve into the future?
I mean, look, I think it's a lot about building on what has been successful to date, and I feel like I'm a little bit of I'm on repeat mode here, but it can't be transactional. You have to be working together. We are our group that that works directly with Cross River, not that the whole company doesn't, but we call them bank partnerships. And like partnership is a critical word. And it's just not going to work if this partnership serves one function versus many functions. It's not going to work if they're not aligned to our mission. It's not going to work if they're not willing to make adjustments to how they do things to help us accomplish that mission. And, wherever it exists that this stuff feels transactional, it's like we have this service, we bundle it, you can use this, and that's the way that it works. Like that's just not going to work in the long run. So I don't know if it's 3 years or 5 years or we're already here, but that's what I really think about as I look to the future of these kind of partnerships.
Every panel that I've ever been on, the last question is always about, look forward 1 year, 3 years, 5 years, and what's going to change, what's going to be different. And I always think to myself, if you asked me today to look back on the prediction I made on a panel 3 years ago of what would be different, I probably was wrong because we can't really predict the future. That said, you made the point, Zach, when we opened, that this partnership is now 11 or 12 years old. It's kind of gone across 3 administrations, call it 3 massive market disruptions. And so it's endured a lot. But when I zoom out and I think about what will the industry look like from a bank fintech partnership standpoint, and maybe I have 3 random thoughts. One, and this is just maybe I'll call it a hope versus a belief, but maybe it's a belief. One, I do think that the bank fintech partnership will be embraced by all. I think not just because of the current administration, but I do believe that people are finally seeing, I mentioned that core competency question before, that the partnership works. There are folks who are really good at certain things and less good at others. And so when I think about the current administration or generally the view of partnerships, I believe it will be embraced by many going forward versus the current view where it's sort of differ depending on who you ask. That's one thing. Second, I truly believe that you'll see a lot of differentiation amongst the fintechs going forward. Right now, there's still a lot of monoline companies in the industry. You have folks who just do one specific payment niche. You have folks who offer maybe one loan product, but you're seeing that change. There are many partners we have today who offer a lending product, a card product, a deposit product, all in one experience. And I think that that's enduring because it's a fulsome customer experience. So I think that, number one, I think you'll have embracing of the partnership. Number two, I believe you'll have a filtering of the fintechs and a focus on more holistic offerings and partnerships. And then I think the obvious one, I think it's obvious, will be consolidation. I just think that there's like a lot of like smaller companies out there that aren't doing it at scale like Best Egg is, who will be ripe for acquisition because they have something to offer someone else. And so whenever the M&A truly comes back to the market, I believe that's the third thing that we'll see, which is like some level of consolidation amongst these companies.
Adam, Bobby, it's been great talking to you today about bank fintech partnerships, and thanks for joining us on the Tearsheet podcast.
Thanks,
Zach, you're awesome. Thanks.